This is the question that changes everything when it comes to investing in stocks in the stock market. Would you still buy the business in case that company which you bought stocks from wasn't listed? Think about that question. And this question is basically meant to kind of reset your mindset. And that is important because you need to be thinking like part owner of a business instead of thinking like you've just bought a given ticket and that is it. You are looking at the charts, how the share prices are moving, without really appreciating that you are part owner of a business. Let me give you a realistic example. Assuming you want to buy a supermarket, okay? There is a supermarket being sold. You are looking to buy a supermarket. When you go there, will you just ask that person like, hey, what is the price? And then you finish the business? The answer, of course, is no. You'll really dig deep in the business to understand the operational aspects, okay? How many employees are there? Are they making a profit or are they making a loss? Okay? How has the growth been or how does the growth look like since inception? Okay? Has this company been in partnership? Are they making any endeavors around expanding the business or growth? How many branches do they have? What is their management looking like at the moment? Those are the questions you're gonna ask before you buy that supermarket in case you're looking to buy a supermarket. So, why aren't you asking the same questions in the stock market? Instead, you just wake up and look at the chart, you're like, price has increased today, I want to buy. That isn't the very optimal of strategy because through that approach, you are not thinking like an investor. You are thinking like someone who's probably gambling. You need to be asking comprehensive questions. Yes, asking about the price is a key determinant of if you have the money to get in or not, right? But beyond that, there are other pertinent questions to be asked and to be thought about before you make a decision to get into the stock market and purchase a given stock or not to do so. That's what I want us to talk about in this video. You are all much welcome to my channel. My name is Afagza Sifuna. In case you are new here, kindly consider subscribing. Down there, click the button called subscribe to join the channel for you not to miss any of the videos I'm going to be uploading for you each and every day. And I will still add it, drop a like on this video. Thank you for subscribing and also liking this video. And as I've said, the biggest mistake people do out here is that they look at shares or stocks as independent things. They think they're just buying a piece of paper, not really appreciating the depth of that investment decision. They are becoming part owner of a business. They are becoming part owner of a company. And yet, the company they are committing their ownership to, they don't care about how the company is performing. That is where there is a mistake. And just to give you a relatable example, okay, if an investor a few years back, let me talk about the 2008, 2009. I think Safaricom IPO happened around 2008 or 2009, okay? So, if a budding investor at that time didn't look at Safaricom as something they can buy because they're just looking at the chart thinking about, hey, I'm just looking at the signal, that is it, right? And they skip buying Safaricom share maybe. Over the years, the business has evolved, okay? It was heavy on voice, right? It added M-Pesa, okay? It added data. It added business solutions, you name it. All these have really increased the value of Safaricom. Because yes, that share you're purchasing is the entry ticket. But beyond that, the real ownership benefit is in the value of the business. And that is why, right from the onset, you need to be asking these pertinent questions so as to be informed the decision you are going to make. Because that decision is going to determine if you are building wealth or not. Don't just look at the share prices there and that particular share you're investing in as a piece of paper. It is ownership in the company whose share you've bought, okay? And that question I've posed about if the company whose stock you bought wasn't listed, would you still invest in the business without being at the Securities Exchange? That's one of the techniques which some investors out there typically ask and they use to make a decision. Case in point, Warren Buffett, who we all know is one of the richest people in the world, has been using that technique since 1960s to decide if they're getting into any stock or not, and they commit for the long-term investing. So ask yourself, if the shares of the company you are holding, right, were not listed at Nairobi Securities Exchange, maybe NSE disappears, will you still continue giving your money or pegging your money on that company performing well? Because that is essentially what you are doing when you are investing in stocks or shares of any company. If the answer is no, then the next question you need to ask yourself is why. If the answer to your why is you don't know, chances are you are investing blindly. But if the answer to your why is because of business fundamentals, then it means even with the NSE, you can still, or you've been aiming to alter your position because of the fundamental analysis you've done. That is why posing that question really assists rewire how we think or the mindset when it comes to investing in stocks, and then start focusing on things which are important to growth of value. Because when the company's value grows, also you as an investor, investors' confidence is going to increase. And if investor confidence out there increase, then the share prices in the market are going to continue increasing and increasing. And also, if the company does well, they'll end up paying dividends to the investors, okay? Through either interim or even final declared dividends. They're going to pay to investors, and that is why or how you'll end up building wealth through investing in stocks. Not just sitting there thinking you're buying a piece of paper, because that's a simplistic way of looking at it. And just to recap for you all this, the key questions which I've mentioned you need to be asking, even before you buy any stock of any company out there, okay? Check, is the company profitable, right? Because profitability is going to assist you know how the company is going to grow. And don't just look at the profit from last year. Look at the profitability trend, both revenue and profit. How has it been performing, okay? Secondly, check, does the company have debt, right? Of course, almost all companies out there have debt. The most important thing now for you as an investor is looking at the debt ratio. Does the debt ratio make sense? Or is the company going to get in trouble because it won't be able to meet its liabilities in the near future? If that is the case, just add that's a red flag. Why commit to investing your money, which you know very well the share price is going to depreciate because the company is going to struggle to meet its obligations, okay? And then the third question you need to be asking before you invest on any stock is, how's the competitive environment? Does the company have a distinct competitive advantage, or is the competition in that particular sector way intense and very volatile for the company? Basically put, is the company in good position right now? And even based on your guesstimation, will the company continue being in a good position because of its competitive advantage in the near future? Okay? And then beyond that, also ask yourself question around who are the customers of the company you want to invest in? Okay? Do they have a good or broad customer base? Right? Case in point, a company like Safaricom, we know very well in Kenya they have over 20 million customers who use their service each and every day. With that, and also having a huge market share, it is difficult for that business to go out of business. But if the business you're investing in only has 100 customers, right, who do purchase ad hocly from that particular business, and even they don't have a means of communicating between the business and the customers, chances are this business might easily go under because it doesn't have a control of the market and also doesn't understand its customers deeply. Those are some of the questions you need to be asking yourself before you invest. Once you've answered all these questions, when you make the decision to invest, chances are you're going to invest for the long term, knowing very well why you started investing, and you are also committing to even buying the business in case the security exchange closes, because you really believe in the business and it is part of your goals and strategy to grow wealth through the partnership you are developing with the business you are investing in. Guys, what do you think about this video? I hope this video has assisted you rewire your mindset, because you will always ask yourself that big question before you make any investment decision. Thanks a lot for watching this video. I look forward to share with you other amazing videos next time. Bye bye and take care.